I appreciate your time with me, Pius Kojobaka, here on Business Live. Profit-making state-owned companies in the country paid more than 194 million cedis to government last year as dividend on investment. This is mainly from firms with government minority shareholding across the country. Meanwhile, SOE sector recorded a profit before tax of 4.6 million cedis from the loss of 9.6 million in 2022. This is an improvement of about 80% from the 2022 financial results. The State Interest and Governance Authority, SIGA, has been engaging the media on these financial results in the following report.
According to the State Interest and Governance Authority, SIGA, the performance of the state-owned enterprises have contributed about 27% of the country's domestic growth product, an increase of more than 50% from the previous performance. The banking and financial sector recorded huge losses due to the implementation of domestic debt exchange program, which many of the banks were involved. Despite recording losses in some of the state entities, government received more than 194 million Ghana cedis as dividend from minority shareholding firms. According to Director General John Buedu, most of the losses are within a reasonable course as some provide social services to support the economy.
Because of the fact that just a few of the entities have enormous resources and they are the ones that make the enormous revenue, they are also the ones that make a lot of the losses because of the space they find themselves. So you can see companies like ECG, companies like Ghana Water have not only the financial or profit-making function, they also have a function that ensures that the citizenry also benefit from the services that they provide. And you can see that clearly, that it is because of some of those services that they provide that lead to these losses that they make. Our job is to make sure that those losses are within budget, those losses are regular and normal losses.
Speaking at the media engagement, Minister for Public Enterprises Joseph Kujo applauded the report and charged SIGA to do more since the exercise is serving as a tool for accountability.
The point in time when SIGA law was promulgated, in 2016, only 6 of all these entities got their accounts audited. Only 18 were able to prepare accounts. But I tell you, if you are an analyst and you understand corruption, and you know that corruption occurs not in public view, but occurs behind the scenes, then you, the media, who is to help government to throw searchlight on these things, will be interested in account preparation of the specified entities. And this president is all out for that.
About 147 entities across the country were covered in this year's State of Ownership report, recording the highest number of coverage since the inception of the report.
And we want to expand the discussion further. Joining us via Zoom is a senior finance lecturer at the University of Ghana Business School, Dr. Benjamin Amoah. Thanks so much, Dr. Amoah, for joining us on Business Live. Now, when you see state institutions pay more than 194 million cedis has been recorded to government last year as dividend on investment, what does that tell you? Would you say that is impressive or still there is room for improvement?
Thank you very much. You know, compared to last year, and previous years where dividend had hardly been coming, and for us to have a year where it is dividend of over 100 million, then when you compare to the past, you can say that it is very good and refreshing to know that some of the state-owned enterprises are recording good profit to the extent that they are paying some dividend to the state. And so in this regard, it is very good, and we need to give them all the support, give SIGA the needed resources so that we can have more of such report and more of such good performance going forward. But it is also instructive to know that in the pool of state-owned enterprises, it is not all of them that will be, strictly speaking, be profit-making. You know, if you look at some of the state-owned enterprises, the nature and vision, the type of services they provide will not be raking in profit. It should be more of sustainability or financial sustainability for some of them, and more of value for money in terms of what the services they provide and then the revenue lines that they provide. For some that have clear revenue lines and clear expense lines, you can't be expecting some profit bottom line from them. For some that are more of service oriented in terms of cost and intervention, it is more about they being able to minimize cost based on a particular benchmark. And for those that are more of revenue centers, it's more raking in revenue than to look at them from the expense side. So it depends on what the state-owned enterprise has been set up to do, and the bottom line that can be used to assess the performance of that particular state-owned enterprise. But overall, if they are recording profit to the extent that government is receiving dividend, then it is something that we should all be excited about.
Excited about, you say, but this is coming at a time when government's expenditure is hitting the roof because, well, it has to bail out some of these state companies. Should government be happy about this development and, of course, going forward, continue to finance them?
Yeah, you see, it will be difficult for government to close its eyes on some of the state-owned enterprises because for some, you will need them as part of your development process. You cannot do without some of these state-owned enterprises. Water is crucial. You cannot do without water. We are not saying that because of that, Ghana Water should be wasteful. No, Ghana Water should be seen from sustainability and from value creation because water is very critical. So the way you will assess the performance of Ghana Water should be different from the way you assess the performance of a bank, which is a state-owned enterprise. Because these two state-owned enterprises, in as much as they are providing services to the public, they have different service orientation in terms of the value creation process and the value proposition. And so we need to understand each of the state-owned enterprises, what they are set out for. If it is the case that it is more of sustainability, then government should look at how best we can sustain the operations and not necessarily to be looking at profit, because not all the state-owned enterprises will be from time to time reporting profit. It is not possible. Some of them will be recording losses simply because of the nature of intervention they are providing to the public.
Now, help me understand what this would mean on government's budget deficit, for example.
Okay, so if they continue recording losses simply means that you were not able to generate enough revenue to meet your expenses. So clearly, that difference, government will have to fund it. If these state-owned enterprises need capital expenditure, huge capital outlay for expansion or for some injection, government will have to fund these resources. And it is up to government because government that owns these state-owned enterprises. Government will have to go into its own coffers, taxpayers' money, to fund them. The point is that some of them will be profitable. Some of them, by their nature, will not be. I'm not saying they will not be popular. Some of them will just have to be looked at from the sustainability and value for money proposition. And so for some that fall into this category of sustainability and value for money proposition, government will definitely always have to support them so they can provide the intervention or the service that they were set up to provide. Not because they have to necessarily make profit. I'm not saying that they should be recording losses, but for them to be sustainable.
All right. So do you hold the view that some state institutions must be privatized?
It depends on the service that they are providing. For some, if the service is so sensitive for our national interest, you may want the state to play a huge interest in that particular area. If the service they provide is something that can be shared between the state and the private sector, why not? We should think of sharing a portion with the private sector. If it is the case that the risk in that particular sector has been de-risked, in other words, government has taken away all the risk, and we can easily offload such an area to the private sector, government should sell that particular state-owned enterprise to the private sector if it will not pose any risk to the state. So it depends on what service that particular state-owned enterprise is providing and whether we can easily offload it to the private sector or we want to share the interest or at best keep it
All right.
by the government so that at least we do not lose our interest in that particular area.
Thank you so much, Dr. Benjamin Amma. Always a delight to have you on Business Live. Share your thoughts with us. Thank you so much, sir. And I would like to bring in Eric Bonsu Ejabing, Head of Planning and Evaluation at SIGA, to help us understand the performance of these state-owned enterprises much better. And he also joins us via Zoom as well for this great discussion. And Eric, thanks so much for joining me. Now, how would you describe the performance of the entities in your state ownership report?
Very much, Pius, and good evening to your cherished viewers and listeners. 2023 performance has been encouraging as compared to the year 2022, looking at the effects of the macroeconomic on the performance of the entities. You would realize, as you rightly put out there, that in the year 2023, profit before interest and tax increased from negative 9 billion to about 4 billion. And also profit after tax, that's the bottom line, also improved from negative 14 billion in 2022 to about 2.5 billion in 2023. So overall, we have seen an increase in revenue and we have seen a marginal reduction in costs. And so the year looks exciting and we are happy about what we have seen so far. And we look forward to working with these SCs to continue to sustain these gains that we have made so far.
It's fair to be excited, but how do you justify the kind of losses that some of your companies are making whilst government keeps investing in them, for example?
Yeah, Pius, naturally, no investor would want to justify any loss in whatsoever shape or form. However, it is instructive to note, like how the doctor also explained, that the nuances that are involved in the nature of our public enterprises and how they operate, the regulatory and policy framework under which they operate. Some entities, by virtue of their public policy obligations, are made to embark on certain activities for which, if they are not reimbursed, it is recorded as a loss onto their operations. And there are some entities also that are under some regulatory regimes for pricing. They're unable to price competitively. And so in such situations, you are able to see that those entities are kind of struggling. So in all, we are saying that some loss situations can be explained within the regulatory and policy framework, but not all the losses can be tolerated. No investor would want to tolerate any losses.
And indeed, what happens to managers of these institutions that keep making losses, although they have the necessary support to turn around the fortunes of the companies?
Yeah, Pius, there are several interventions that are available, and it goes not only to managers, but also to the governing boards of these entities. So first of all, we look at the opportunity to provide training and capacity building to enable them to be efficient in performing their mandates. Then there's also the other aspect where we have to provide any support where needed for the entity to trigger a turnaround if it is necessary and it is well justified. And then we look at also the regulatory and then the legal framework. Of course, Regulation 206 of the Public Financial Management Regulation provides a guideline for handling entity heads and boards who are unable to perform within the desired framework. Also, there are administrative sanctions as enshrined in the SIGA Act. So there are measures available to deal with such managers and governing boards who are unable to perform. It even goes down to recommending for their removal because it's enshrined in the SIGA Act, specifically Section 4J, that SIGA is mandated to advise government on the removal of boards and entity heads. So these are some of the measures that are available.
And how come we've not seen such actions being executed because they keep making losses?
Yes, it is true. There are interventions that are available in place which have been triggered. And so definitely we will get to the stage where you will see the very last button being pressed that will lead to recommendations for removal for non-performance. So we are gradually getting to that stage. All
right. Any quick update on the companies that will be listing on the Ghana Stock Exchange and how soon should we be seeing this happening?
Yeah, I think this afternoon our Director General alluded to the fact that there are some conversations going on and it has reached a certain stage. Very soon the authority will be coming out with a guideline and roadmap. And so just be on the watch out for that space.
Thank you so much, Eric Ejabeng, speaking to us on Business Life. We appreciate your thoughts, sir. You're still watching Business Life. We are back with more. Please stay. Welcome back to Business Life, and we want to talk about the cedi because it has recorded one of its first appreciation against the dollar for this year in the month of August 2024. This is based on data picked up from banks on the cedi's performance in terms of trading and rates offered to their retail clients. George Wiafe reports.
In May this year, the cedi's rate of depreciation against the dollar stood at more than 7%. It slowed to 4% in June and around 1.9% in July this year. However, the cedi posted an appreciation, although it can be described as marginal, as the data showed that it went up by 0.16%. There are several factors that are linked to this development in August. One can talk about the improved dollar supply coming from the Bank of Ghana, the dollar weakening in value on the international market. These numbers are just based on how the cedi performed in each month of this year. However, the picture doesn't look that good when you track its performance from the beginning of this year to now, as the data showed that the year-to-date depreciation is pegged at 24.41%. The banks, on the other hand, are worried about the cedi's fortunes going forward. This is because they're expecting the dollar demand to pick up strongly as some firms and individuals try to restock for the Christmas holidays and festivities.
Meanwhile, Senior Finance Manager at Deloitte, Dennis Brown, is projecting an increase in pressure on the cedi in the coming months as a result of the festivities. This is after the cedi recorded its first appreciation against the dollar for this year in the month of August 2024. Speaking on Marketplace, however, Dennis Brown doubts the gains can be sustained.
I think that, yes, we've seen the cedi appreciate against the dollar more recently. I think this comes off the back of the stability or relative stability we've seen in the second quarter. We saw that in the budget statement from the minister as well, that we've seen some relative stability, and therefore there's a further improvement where we are actually seeing appreciation of the cedi against the dollar. Asking whether there's room for optimism, yeah, I'd say yes, but not much, because we're also looking ahead into the last quarter of the year, where we know that the pressure really will start mounting on the cedi because of the festivities associated with the Christmas or the end of year, festivities. So you have individuals and businesses that will be rushing in for these dollars, and that will put some pressure, and that might see, the cedi again depreciating, against the dollar. But this is quite cyclical. That's what happens normally towards the end of the year. So while there is room for some optimism, I doubt this appreciation can be sustained deeply into the last quarter. We are likely to see from November, another round of pressure on the cedi.
In more business news, former president of the Ghana Association of Banks, Alhassan Andani, is asking government to be quick in restoring the country's credit worthiness. This is said will aid Ghana in accessing the international capital market. Speaking at the launch of the Chartered Institute of Development Finance Ghana, Mr. Andani said government should be more strategic in its engagement with debt holders, both locally and internationally.
The former president of the Ghana Association of Banks, speaking at the event, expressed concerns over Ghana's debt situation. He called on government to have a matured conversation with the bilateral creditors.
I think we have to restore as quickly as we can our creditworthiness, our reputation as a country. For me, that is, whether it's in the short term, the medium or long term, our biggest problem is to re-establish as quickly as possible our creditworthiness. And I think that given that the domestic debt holders were the most significant, governments must have mature conversations with these debt holders, and let's see how we can immediately wash up and freshen up ourselves, and hopefully our external partners can have a look at us. Now, if we look at it, our bilaterals were not that badly hit. 5 billion was not that high. I mean, their total exposure is 5 billion. Ghana is a very strategic country.
Chapter President of CDEF Ghana, Reverend John Eduji, called on government to explore funding locally for development.
funding for resolving our own problems. And that is why development finance is key. It is key to resolving and understanding our peculiar issues and providing mobilization for addressing those issues. And so today we are just doing this launch to let Ghana know, the world know, that this is no more an idea, it is no more a thought. There is a platform, an opportunity for us all to put our thoughts together, develop solutions, engage the discussion, broaden the discussion.
The Chartered Institute of Development Finance Global is a non-Ghanaian institution that was established 11 years ago in 2013.
And to one of our headline stories, the Ghana Airport Company has announced that it will move some international airlines operating out of the Kotoka International Airport to Terminal 2. The airport company has currently designated Terminal 3 for international flights, while Terminal 2 is reserved for some domestic flights. However, the Ghana Airport Company in a statement revealed that they are planning to change the existing plan by moving some international flights to Terminal 2. According to the company, this is to help decongest Terminal 3 for the airlines and passengers. It adds that details will be shared as soon as stakeholder engagements are concluded. And that's it for Business Live for today. I am Pius Kojo Baka. We've got more stories for you when you log on to myjoyonline.com/business. Quality of home, #1 preference of consumers. That's according to COPEC, and we had that great discussion yesterday on Business Live. Now, Cedi depreciation to slow down this week as demand pressure subsides. $1 equals 16 cedis 28 pesos. More stories on myjoyonline.com/business. See you at 8 p.m. with Prime Business.